IEX, the equities exchange made famous by Michael Lewis's Flash Boys, is entering the options market with its own options exchange. Bryan Harkins, who joined the firm as president from SIBO, is leading the charge. And here today, we are also joined by Katherine Doherty, who has been covering the story for Bloomberg News. And Bryan, perhaps first talk about why you're doing this. Of course, there is a cost to entry. There's a cost to building this infrastructure out. What's the big opportunity for you?
Absolutely. First of all, thank you for having us, having me on. We looked at the entry into the options market. I think there's three main factors driving our interest. One is, frankly, the unprecedented growth in the industry, driven by retail activity, improved investor education. So honestly, it's one of the fastest growing asset classes in the world. I think options market volumes have largely tripled over the last decade or so. Two, I think what we've built in IEX equities and our obsession over market quality and delivering a better liquidity product for investors is really driving our interest. And then I think third is really that success starts with people. And IEX has built an amazing team with a great foundation. And we just brought in two of the, in our opinion, the best industry experts, exchange experts for options in Ivan Brown and John Palmer.
So, Bryan, there's a number of options exchanges out there. Yeah. If you do get approval to run your own venue, IEX would be the 19th options exchange. What makes your venue different, and why do you see success, or do you hope for success in competing with the 18 other exchanges out there?
Of course, yeah. I mean, look, we asked ourselves that question. You know, when I look at our equities franchise, there's no exchange that looks like IEX. It's a very competitive market, no doubt about it. But our product, with obsession over liquidity, improving outcomes for liquidity providers and market makers, namely to address adverse selection, I think is something that can be directly applicable in the options industry. But that said, look, the reason why I announced today and not a few months ago was because we wanted to have in-depth conversations with market participants about some of the ideas we had, and frankly, to listen to how we can help solve some of the market challenges that they see.
Part of this gigantic boom, let's say, in options activity we are seeing, in part, is really attributable to this boom in retail trading as well. What role is that playing here, and how much of that is what you're trying to capture with this exchange?
Yeah, it's a great question. I think, when you look at what happened to options industry volumes, particularly coming out of the pandemic, you had this amazing spike in industry volumes that everybody thought would, frankly, abate, and it's been nothing but persisted, and the growth and the market, the innovation in the products around zero date, index options, defined outcome products that wealth managers are using. I mean, the innovation is happening at all turns in the space.
Do you think that growth is sustainable in the long term? I mean, you're seeing it continue, but there's skeptics out there that say, when does it pull back? When does it become not sustainable?
Yeah, well, I think, look, our job as an exchange operator is and why we're interested in this space is to provide tools, because look, options it's really more of a quote-driven market, much different than equities in the sense that Tesla has probably 3,200 different types of Tesla. The options industry has about 1.5 million tradable instruments, whereas equities is about 10,000. So really, the risk profile of the trade, in order for this to be sustainable, we have to provide tools to the market makers and to the market professionals serving those retail investors.
At the end of the day, too, there are a lot of worries, too, to the point Katherine's making, not just about sustainability of those options, but whether it's good for investors, whether these retail traders know what they're getting into, do they?
Well, I think, the options industry does a great job with education, and it's got to be suitability standards, and there's got to be very transparent disclosures about the use cases of options. And there's multiple, they're not just speculation tools. You can use it to hedge portfolios. You can use it to generate additional premium and to enhance the value of your portfolio.
How are you thinking about education and building out this new venue? Will it be part of, are you going out to the market and are you building your own tools to educate?
Well, I think we're focused on execution quality and serving really the market makers and the liquidity providers, whereas we look at them as great partners in how can we help them better educate, make traders and investors feel safe in trading and be able to transfer risk in the options market.
Last question here, really. What will it take take you to get past the finish line here? You still require, as Katherine reported, regulatory approval here from the Securities and Exchange Commission. Is there anything else you really need to get off the ground, and how soon can you start trading?
Yeah, I mean, we got our sights set on 2025. The project's well underway. I think we're mainly focused on, one, ensuring that our regulators, the SEC, are comfortable with our market model, and two, that there's going to be adoption of our product. We understand that's a competitive market. We're not trying to launch another Me Too copycat product like some recent options entrants. So I can assure you our product's going to be different, but we want to make sure that we approach the market in the right way.
So no firm date yet to reveal?
It all pending SEC approval.
As many other things are as well. Thank you so very much. That is IEX Group President Bryan Harkins.